Assalamu alaikum. How are you, students? Today we are going to solve June 2021 A2 number 32 inshallah. Please kindly subscribe my channel, like it, and inshallah I'll be solving most of the questions. I'll try my level best for levels and level students in your accounts. Let's see the question. This is the question. Now, question number 1 is basically absorption. Absorption means absorption of a partnership by a company. A company is taking over. You can call it taking over. Now see what happened. First we see what is required. Prepare the realization account. So realization account is prepared only for those items which are taken up by them. Are you getting my point here? Taken up by them at their book values. Okay. Now we'll make it realization account. Okay. Now see plant and property. Plant and property, the value of plant and property is 300,000. So that's going to be recorded over here as $300,000. Done. Then we have equipment, 71,000. We are going to debit. 71,000. Then third item is motor vehicles. Okay. Then inventory. Inventory 24,000. Okay. Now, what about other assets? Trade receivables is 36,000, but what they say, trade receivable 4,500 were considered irrecoverable. The remaining trade receivable would pay 30,500 to the partnership in full settlement of their accounts. It means irrecoverable is 4,400. Total irrecoverable debt is 4,400. We have to realize that, and they are paying to the partnership. They are not going to pay to the Z company. So we are not going to include it in realization account. We don't need to realize that because we are already, our customers are paying us, but they are not paying the full amount. So actually, if you see how much is the amount of accounts receivable. Now, account receivable is 36,000. Okay. Minus 4,400 bad debts. And out of 31,600, we are paying 30,500. So it means 1,100 is your discount allowance. Okay. So we have to report it in realization, the bad debts or irrecoverable debts. Irrecoverable. $4,400. And we have to include it discount over here. Discount allowed is 1,100. Done. Now, see, all the assets are there. Okay. Because they are paying to the partnership, so it's not going to include in realization account. Now come to liabilities. The partnership would pay 14,400 in full settlement of trade payables of 15,000. The partners are paying 15,000 after availing 600 discount. So discount we are going to consider over here. Discount received. Discount received 600. Okay. And How much accounts payable? Partners are paying 15,000 after settlement of 600 discount. Okay. The remaining. So total accounts payable is 33,000 minus 15,000. It's 18,000 is taken up by the Z company. So accounts payable is or trade payable is going to be recorded over here as 18,000. Okay. Discount receipt, trade payables. Acha, okay. Now, the purchase consideration is $500,000. So it's going to be recorded over here. Z Limited. The purchase consideration $500,000. Done. And one more thing which is left is this one. This one. Another motor vehicle taken away by Alan at book value of 28,000. So whatever the book value, Alan is taking. Alan is taking. Alan capital account is going to be recorded over here in realization. 28. Now, the difference of realization account is going to be divided among the partners, between the partners, and how it is going to be divided to the profit or loss, we don't know that. So what we do, just for, I'm not, this is not part of answer, but actually I'm doing it for you only. I'm going to calculate 300,000 plus 71,000 plus 62,000 plus 24,000 plus 4,400 plus 1,100. Total is 4,62,500. Now, okay, and what is the total over here? 600 plus 18,000 plus 500,000 plus 28,000. The total is 546,600. Now, the difference, if the credit side of realization is heavy, it means the company is going to have, the partnership is going to have profit on realization. They are in a favorable condition after selling their business to Z company. So that profit is how much? 546,600 minus 462,500. 84,100 is the profit going to be divided between the partners. Okay. So what is the ratio of dividing this thing? 3:2. 84,100 multiplied by 3 divided by 5. 50,460. Okay. 50,460. And what about the other one? 50,460. 50,460. That is going to the first partner named Alan, and the second one is Brian. The profit going to Brian is how much? 84,100 multiplied by 2 divided by 5. This is 33,640. Yeah. Okay. Done. Now get the total over here. That must be equal 546,600. 546. This is the way you have to do this question. Getting my point here? So this is how we take a realization account of items including that. Now move to the next part of the question. Difference between realization and revaluation account. Realization account is going to make we make realization for closing the business. Revaluation account can make any time in the business. Realization account uh, uh, means change of ownership. Revaluation account means do not change the ownership. Okay. Uh, now these are two differences. You can write more and you can get text from your teacher on as well. Acha. Prepare a statement showing the finance settlement to or from each of the partners. Now, how much partners will get? Okay. Now, first we have to report the capital accounts of partner, which is very much given 2,50,000 Alan and 200,000 Brian. Capitals 2,50,000 and now current accounts. Now current accounts, if you come to current accounts, then 27,000, Brian minus 8,000. 27,000 and this is minus 8,000. Done? Okay. Now profit on realization. We have to take profit on realization from the previous ones, T account 5460 and 33640. This is 5460 and 33640. Done? Okay. Now Alan has taken a motor vehicle. Taken up by Alan. So this is going to be reported by 28. And it is going to be recorded in minus because this will decrease the capital of L. Now, what we have to do, now shares, shares we will get. So what about ordinary shares? Now see, this is the purchase consideration is 500,000 and minus 23,000 is given as cash, and the remaining is paid by the shares. It means $477,000 have been paid in the form of shares. Okay, so this 477,000 would be divided partners in the proportion to their capital accounts. So what was the capital account proportion? Let's see. It was the capital account ratio is 250,000 and 200,000 means 5 into 4. The ratio is okay. So ordinary shares are going to be divided between them like this: 4,77,000 multiplied by 5 divided by 9. So 2,65,000 shares value of shares he will be taken by and the remaining 4,700 multiplied by 4 divided by 9. 220. Done. So what happens in the current account? This current account was 2,50,000 plus 27,000 of current account he has plus 50,460 he has for profit or realization. After which he has taken goods of 28,000, motor vehicle 28,000, and share of 265,000. 34,460 is going to be paid from business bank account. 34,460. What about him? What about him? 34,460 is left. How much Brian has left with? 200,000 minus 8,000 plus 33,640 plus minus 212,000. 13,640 is left to be paid from business bank. Done? This is it. Okay. Now we are free with this page. Go to next page. Calculate the goodwill arising from acquiring the participants. Now see. Now see purchase consideration. And purchase consideration is how much? $500,000. Okay. Now take all the assets. Assets. Here's taken property. Property. The value of property is how much? Here's taken. Here's taken value of property. 350,000. Then after property, that was equipment. And he has taken equipment. How much? Value of equipment 68,000. Then after property and equipment, motor vehicles. Motor vehicles. How much? Motor vehicles, I think he has taken only one motor vehicle. 29,000, yes. One motor vehicle, 29,000. ठीक, अच्छा. Inventory 20,000. Done. And okay. 18,000 is accounts payable. So what we do, we get the over here, value of assets. Assets. So that would be 50,000 plus 68,000 plus 29,000 plus 20,000, 4,67,000 value of assets. Now take liabilities. And we have only one liability, that is accounts trade payable. Trade payables. Trade payables is how much they have taken? 18,000. Right in the bracket, so we don't get to deduct it. All negative figures should be written in brackets. So we will get value of business over here. So what is the value of business? Here we take value of business. How much is the value of business now? 4,67,000 minus 18,000. Value of business 4,49,000. 49,000 is the value of business. So the value of goodwill out of purchase consideration 500,000 is 51,000 goodwill. 51,000 is purchased goodwill. Or you can simply write goodwill. Done? A, B, C. We have done. E. Okay. Before acquiring partnerships, you would have two equal shareholders and the total share capital of $1 million. These shareholders are directors. A few months after acquiring the partnership, C Limited decided to acquire the business sole trader. The agreed consideration would be 800,000. The sole trader requests the consideration should be settled by 640,000 ordinary shares of C Limited and a directorship in C Limited. Advise director whether or not they should accept the request of the sole trader, justify your answer showing relevant calculation. The most important thing is this: if they have only total share capital of 1 million, and out of which they have to give $800,000 to the sole trader. And if he will acquire 640,000 ordinary shares in Zine Limited, he will be the most powerful director in the company. Okay, so there may be new conflicts in the company. Now it's up to you what you decide about it, because if they enter, very possible that the incoming person, the sole trader, would bring assets, would bring more customers, but there is power conflict. Now come to question number 2. The accounting year of Y Limited ends on 31st December. For the year ended 31st December 2008, Y Limited had revenue of 806,400 and a non-current asset turnover of 2.10 times. Now see, class. Okay. Here we are. State how non-current asset turnover is calculated. Is calculated like this. It's calculated non-current assets is equal to sales revenue upon sales revenue divided by value of net book value. Net book value this is the point. This is actually efficiency ratio. It tells us about how efficient is our investment in non-current asset is in earning the sales revenue. That's why we calculate. Okay. Calculate net book value of non-current asset. Very easy. This shows that revenue is 806,400 and non-current asset turnover is 2.10 times. So net book value of non-current asset. Net what we do? Sales revenue divided by turnover. Sales revenue is how much? 806,400 and 2.10. 806 400 divided by 2.1. कितना आ जाएगा? 806,400. So 806,400. 2.1. Answer is 3,84,000. Answer is 3,84,000. Okay. Sorry, class. What we have to do here? We have to make a table. Huh? Prepare a non-current asset schedule to use as note to the financial statement for the 30 year ended 31st December 2020. Now, how to make this schedule? Go to the paper. Now we have to make the schedule. When we are making the schedule, we have to be very much careful. See, Y Limited classifies non-current assets into three categories: activity depreciation 31st December 2019. For each category, was property, plant and equipment, furniture and fixture. So what we do actually here, what we have to write, we have to write over here cost. Now cost on cost and now see on 1st January 2020. See, in our previous question, we have calculated total value of ending through the turnover. We have calculated 3,84,000 the value of yeah. Here we calculated. Here remember 3,84,000. Now 3,84,000 is going to be divided in the book value of 532. Okay, see. So 532 means 3,84,000 multiply 5 divided by 10 is the value of book value of property at the start of the year. And if we add this depreciation 1,20,000 plus 1,28,000, and we'll get 3,20,000 over here as the value of property 320,000. Okay. Now see, for plant and equipment, that was 3,84,000 multiplied by 3 divided by 10, 115,200 plus 168,800. That is 2,84,000 is the value of plant and equipment. 2,84,000. Now, what about furniture and fixture? 3,84,000 multiply 5 divided by 2 divided by 10. 76,800 plus its accumulated depreciation 101,300. The answer is 1,78,000, and it's going to be reported over here 178,000. And the total is how much? 3,20,000 plus 2,84,000 plus 178,000. Total answer is 782,000. Got it? And what else we did with the on 1st January property values were revalued to 3,60,000. 3,60,000 means revaluation is how much? 40,000. Write it over here. 40,000. Next, on 1st March, office furniture was purchased for $25,000. And there is no revaluation, so we are going to add it only 40,000. We have purchased at now see additions furniture furniture 25,000. Okay. And what about any other thing, any other addition? The old equipment was 35,000. The old item was 35,000. It was gone, and while every paid that's 34,000 as a part payment for the new item. The old item had its part exchange value is 8,000. So if we are paying 34,000 and 8,000 is the discount for gold, it means the new addition was 42,000. So we'll write it over here. New additions 42,000. Total 42 plus 25. 42 plus 25. 67,000 is the total additions. 67,000 additions. Okay. Now see disposals. Disposal, plant and equipment. That was 35,000. Now get the totals over here. Done. Okay. Now get the totals over here. This is 3,60,000. Three lakh 26,000 minus 35. 2,90,000. Now 178,000 plus 25,000. The answer is 203,000. Now total over here 782 plus 40 plus 67 minus 35. 854. This is the total. That schedule must be very disturbing. Last time when so after costs and valuations, we'll come to accumulated depreciation or provision for depreciation. Accumulated depreciation was given property and plant at the start of the year. Everything 128,000. 128,000. So what about this? 168,800. 168,800. That's 101,200. 101,200, and altogether it is 128,000 plus 168,800 plus 101,200. 3,98,000. Total 3,98,000. 3,98,000. Now, what about this devaluation? The result of devaluation, we lose this accumulated depreciation on property would be fixed because we have devalued property. Okay, and after because we have sold devaluation, so 128,000 is going to be deducted over here. 128,000. Done. Now next, disposal. Disposal was 35,000. So that is also going to be deducted over here. And This is disposal. And now what we have to do, additions or charge for the depreciation. Charge for depreciation for the year. Okay? For the year. Now we have to charge and show the workings over here. Okay. See, now what about property? Now property is revalued, but how many years have been gone? What we have to calculate for property? The value of property given was accumulated depreciation of property was how much at the start of the year? 1 lakh 1,28,000. 1,28,000. 1,28,000. If we divide with the cost of property at the start of the year, that was 3,20,000. 3,20,000. So the answer would be 128,000 divided by 3,20,000. 40%. It means 40% of the property is depreciated. Now, again, this time the life of the new value of property is 3,20,000. 3,60,000. 40% of the property is depreciated. So the life of property is life of property at this time 20 years. Life of properties was supposed to be 20 years, and out of 20 years, how many has been gone? 40%. 20 years multiplied by 60% is left. It's 12 years left. Now the new value of property is how much? 3,60,000 divided by life, 12 years left. The answer would be 30,000. So this is the depreciation charge for properties. 30,000. Getting my point clear? Now see, for plant and equipment. The value of plant and equipment at the start of the year is given here. That was 2,84,000. Huh? Yes, 2,84,000. The value of plant and equipment. 2,84,000. No. No, sorry. Yeah, this one. 2,91,000. Now 2,91,000 at the end of the year. 2,91,000 minus provision for depreciation at the start of the year is 1,68,800. 1,68,800 minus 35,000 disposal. Depreciation transfer to disposal. This one. Okay. So the total answer would be 2,91,000 minus 1,68,800. Minus 35,000. The answer is 87,200. And how much? 20% reducing balance value. Multiply by 20%. That would be minus 35,000 minus 291 multiplied by 31,000. What about now? Now the next one. Next one is furniture and fixtures, 203,000. Furniture and fixture, 203,000. And how much percentage? 20% straight line method. Oh, that's it. Easy, multiply by 20. So the answer would be definitely 3,000. The answer is 40,000. 40,000. 600. The total depreciation charge 30,000 plus 31,440 plus 40,600. Answer is 102. 1024040. 1024040. Done. That was the charge for depreciation. Okay. Now, ending provision. Total accumulated depreciation total over here. This is that must be 30,000. This is how much? 1,68,800 minus 34,000. So 1,33,800. 1,33,800. Then we have 1 plus 600. The answer is 1,41,800. 1,41,800. Total 398,000 minus 1,38,000 minus 35,000. This is what 235,000. Plus 102. Answer 337,000. Done. Okay, this is 31st December. 31st December 2020. And now next, book value. Book value. Now book value. 360 minus 30. Net book value. Value. 360 minus 33 lakh 30,000. Yeah. 2,91,000 minus 1,33,800. 168,000. Something's wrong. 168,000 plus 31,000. This one is not correct. 5,000. 2,91,000 minus करेंगे 125,760. 125,760. अच्छा, और इसमें क्या आ जाएगा? 203,000 minus 141,800. अच्छा, 61,000. 61,000. Done. So total 854,000 minus 037,040. Answer is 516. 696,0516,96. Done. This is done. Okay. Okay. What next? Explain director why did because the efficiency of motor vehicle decreases, and with decrease in efficiency, we have to the value of motor vehicles decline. Value of the motor vehicle declines the use of time because it is an efficient asset, so it needs to be depreciated. Okay. Explain director impact on profit using straight line method and the reducing balance method of depreciation. So what do you think? According to in straight line method, the depreciation amount remains constant. So it's constantly deducted from the profit with a constant amount. And diminishing balance method, they give higher. They work as a tax shield. It was higher in the year of beginning and lower in the year of ending. Straight line will give you a constant decline in value, and diminishing balance method will give you a decline in the value every year. So the deduction from the profit will be different, and it's very obvious. The straight line method would give you the constant decline in profit. Diminishing balance method would show a decline in the value of profit. It will show a greater tax shield in the beginning of the year, lower tax shield in the end of the year. Okay. So I think this is the end of question. Okay. Answer question number 3 and 4 we'll do in our next video, inshallah. अपना बहुत ख्याल रखिएगा. Take care. तो इंशाल्लाह कल अपनी जो है वो नेक्स्ट वीडियो के साथ हाजिर होंगे. If you have any questions, any queries, any problems, you can contact me anytime. You are most welcome. Please subscribe my channel. Thank you. Take care. Allah Hafiz.